Hello and welcome back. Today we're powering through the latest financial results from a giant in the Indian energy sector, NTPC Limited. Hoo, this is always a big one to watch.
Absolutely. NTPC, or National Thermal Power Corporation, is India's largest power utility. Their core business is, of course, electricity generation, and they also have interests in coal mining, power trading, and equipment manufacturing. They've got a massive portfolio, including thermal, hydro, solar, and wind power plants. It's a behemoth, really.
Indeed. So it looks like we're looking at their audited financial results for the quarter and financial year ended March 31st, 2025. The Board of Directors approved these results in their meeting held on May 24th, 2025. We'll be covering both standalone and consolidated figures today.
That's right. And just to set the context, these are the audited numbers. So they've been through the scrutiny of their joint statutory auditors.
Perfect. Let's kick off with the key financials. Can you walk us through the revenue from operations for NTPC? Let's start with the consolidated numbers for Q4 FY25. How does that compare year over year and quarter over quarter?
Okay, on a consolidated basis for the fourth quarter of FY25, NTPC reported revenue from operations of 49,833.70 crore rupees. Comparing that to the same quarter last year, Q4 FY24, which was 47,628.19 crore rupees, that's a decent year-over-year increase. Now looking at the quarter-over-quarter performance, revenue in Q3 FY25 was 45,069.43 crore rupees. So we are seeing a sequential increase from Q3 to Q4 as well.
That's a positive start. And for the full financial year FY25 on a consolidated basis.
For the full year FY25, consolidated revenue from operations stood at 1,88,138.06 crore rupees. This is up from 1,78,524.80 crore rupees in FY24. So growth on the annual front too.
Good to see that consistency. Now, how do the standalone figures for revenue from operations for Q4 and the full year?
For standalone revenue from operations in Q4 FY25, it was 43,903.65 crore rupees. Year over year, this is up from 42,538.31 crore rupees in Q4 FY24. Quarter over quarter, compared to 41,368.88 crore rupees in Q3 FY25, that's also an increase. For the full financial year FY25, standalone revenue was 1,70,037.37 crore rupees, up from 1,62,008.95 crore rupees in FY24.
All right, let's move to the operational profitability. How does the PBIT, that's profit before interest and tax, which we're using as an EBITDA proxy, look? Let's take the consolidated generation segment PBIT as that's their main business.
Right. For the consolidated generation segment, the PBIT, which includes regulatory deferral account balances for Q4 FY25, was 13,807.51 crore rupees. This is a strong jump year over year from 10,890.07 crore rupees in Q4 FY24. Sequentially, compared to Q3 FY25's 9,116.21 crore rupees, it's a very significant increase in Q4.
Wow, that Q4 jump is quite something. And for the full year on consolidated generation PBIT?
For the full year FY25, consolidated generation PBIT was 42,539.77 crore rupees, up from 37,228.67 crore rupees in FY24. So, solid annual growth in operational profit as well.
What about the standalone generation PBIT?
On a standalone basis, the generation PBIT for Q4 FY25 was 10,595.03 crore rupees. This is up from 8,596.51 crore rupees in Q4 FY24. And quarter over quarter, it's up from 7,876.45 crore rupees in Q3 FY25. For the full year FY25, standalone generation PBIT was 35,474.26 crore rupees compared to 31,497.75 crore rupees in FY24.
Okay, now let's look at profit before tax or PBT. We should look at this before the impact of regulatory deferral account balances to understand the underlying PBT. Consolidated first.
Okay. For the consolidated PBT, this is after the share of profit from joint ventures, but before RODA. In Q4 FY25, it was 8,326.80 crore rupees. This is quite comparable to 8,375.12 crore rupees in Q4 FY24. Sequentially, from Q3 FY25's 7,587.90 crore rupees, there's a notable increase. For the full year FY25, this PBT stood at 28,496.41 crore rupees, up from 27,141.45 crore rupees in FY24.
And the standalone PBT before RODA and exceptional items?
Standalone PBT for Q4 FY25 was 6,034.24 crore rupees. This is down from 6,807.16 crore rupees in Q4 FY24. Sequentially, it's also down from 6,986.39 crore rupees in Q3 FY25. For the full year FY25, standalone PBT was 23,636.40 crore rupees, up from 22,710.62 crore rupees in FY24. It's interesting to note that the quarterly standalone PBT shows a year-over-year and quarter-over-quarter dip, but the annual figure's up.
That divergence is noteworthy. Now, let's talk about the bottom line. Profit after tax or PAT. This will include the impact of RODA. Let's look at PAT attributable to owners for consolidated.
Right. Consolidated PAT attributable to owners for Q4 FY25 was 7,611.22 crore rupees. This is a significant increase from 6,168.73 crore rupees in Q4 FY24. And quarter over quarter, it's up substantially from 5,062.51 crore rupees in Q3 FY25. For the full year FY25, consolidated PAT attributable to owners was 23,422.46 crore rupees, up from 20,811.89 crore rupees in FY24.
That's strong growth on the consolidated PAT. What about standalone PAT?
Standalone PAT for Q4 FY25 was 5,778.14 crore rupees. This is up from 5,556.43 crore rupees in Q4 FY24. Sequentially, it's also up from 4,711.42 crore rupees in Q3 FY25. For the full year FY25, standalone PAT was 19,649.41 crore rupees compared to 18,079.39 crore rupees.
And the earnings per share? EPS consolidated. First,
Consolidated basic EPS for Q4 FY25 was 7.85 rupees. This is up from 6.36 rupees in Q4 FY24. Quarter over quarter, it's up from 5.22 rupees in Q3 FY25. For the full year FY25, consolidated EPS was 24.16 rupees, up from 21.46 rupees in FY24.
and standalone EPS?
Standalone basic EPS for Q4 FY25 was 5.96 rupees, up from 5.73 rupees in Q4 FY24. Sequentially, it's up from 4.86 rupees in Q3 FY25. For the full year FY25, standalone EPS was 20.26 rupees compared to 18.64 rupees in FY24.
Any significant movements in other income that we should be aware of?
Yes, other income is quite substantial. On a consolidated basis for Q4 FY25, it was 1,251.35 crore rupees, up from 1,188.36 crore rupees year over year, and significantly up from 528.52 crore rupees quarter over quarter. For the full year FY25, consolidated other income was 2,724.39 crore rupees. On a standalone basis, Q4 FY25 other income was 1,909.00 crore rupees, a big jump from 1,682.59 crore rupees year over year and 934.09 crore rupees. Ah, For the full year FY25, standalone other income was 4,376.12 crore rupees. This definitely contributes to the profit figures.
Those are some chunky other income numbers, especially on the standalone side. Now looking at profitability margins, say net profit margin, on the consolidated numbers, what are we seeing?
If we take the consolidated PAT attributable to owners and divide it by the revenue from operations for Q4 FY25, the net profit margin is roughly 15.27%. For the full year FY25, it's around 12.45%. These are healthy margins for a utility company of this scale. The standalone margins would also be robust, especially with that higher other income component.
Were there any exceptional items reported in these results, either standalone or consolidated?
In the standalone results for FY24, there was an exceptional item of 834.55 crore rupees, which was a provision written back related to RGPPL. For FY25, the summary tables for both standalone and consolidated results don't highlight any new exceptional items for the current quarter or full year, suggesting a cleaner operational comparison for FY25 itself.
Okay, that's good for comparability. Let's touch upon the balance sheet. Any key highlights from the investor presentation or the results document regarding assets, debt, or equity as of March 31st, 2025?
From the investor presentation, as of March 31st, 2025, on a consolidated basis, gross fixed assets stood at 4,04,210 crore rupees and CWIP was 1,0776 crore rupees. Total equity attributable to owners was around 1,84,071.16 crore rupees. Total debt, combining long-term and short-term, on a consolidated basis from page 13 of the presentation, was around 2,47,575.12 crore rupees. The debt-equity ratio on a consolidated basis was 1.34. On a standalone basis, gross fixed assets were 3,13,669 crore rupees with CWIP at 52,327 crore rupees. Total equity was 1,61,640.55 crore rupees and total debt was around 1,85,243.57 crore rupees. The standalone debt-equity ratio was 1.15.
What about cash flows? Any highlights there? And importantly, any news on dividends?
The detailed cash flow statements are in the full annual report, but the results announcement on page 1 mentions dividends. The board has recommended a final dividend of 3.35 rupees per share for the financial year 2024-25. This is in addition to the first interim dividend of 2.50 rupees per share and a second interim dividend of 2.50 rupees per share already paid. So, the total dividend for FY24-25 comes out to be 8.35 rupees per share. That's a pretty decent payout.
That is indeed a good dividend for shareholders. Now, let's dive into segment performance. NTPC primarily has generation and others. How did these segments perform, say, on revenue and profit before interest and tax on a consolidated basis?
Right. The generation segment is overwhelmingly the main contributor. On a consolidated basis, for Q4 FY25, the generation segment revenue was 49,352.99 crore rupees, up from 47,088.70 crore rupees year over year. The PBIT for this segment, including RODA, was 13,807.51 crore rupees for Q4 FY25, a significant increase from 10,890.07 crore rupees year over year. The other segment on a consolidated basis reported revenue of 4,431.09 crore rupees in Q4 FY25 and PBIT of 273.61 crore rupees. For the full year FY25, consolidated generation revenue was 1,84,458.13 crore rupees with a PBIT of 42,539.77 crore rupees. The other segment had full year revenue of 17,881.61 crore rupees and PBIT of 1,242.48 crore rupees.
So, generation is clearly the powerhouse. Summarizing the year-over-year performance, what are the key drivers you see?
Year over year, both consolidated and standalone results show good growth in revenue and, more significantly, in profitability, especially PAT and PBIT. This could be attributed to increased generation, better operational efficiencies, potentially favorable tariff orders, and, as we saw, a healthy contribution from other income. The plant load factor for coal stations, as per the presentation, was 77.44% for FY25, the highest in the last 7 years, which is a strong operational indicator.
Any significant notes from the results or the investor presentation that caught your eye? For instance, the capacity addition or their new frontiers like green hydrogen?
Yes, the investor presentation highlights an installed capacity of 80 gigawatts for the group. They added 3,972 megawatts in FY25. There's also significant visibility for renewable energy, targeting 60 gigawatts plus by 2032, with 7 gigawatts already under operation. They've also made strides in FGD commissioning, reaching 20 gigawatts, and started work on a green hydrogen hub in Andhra Pradesh. The presentation also mentions new frontiers like nuclear power with a target to develop 30 gigawatts and a pumped storage project portfolio of over 21 gigawatts. So, a clear focus on growth and energy transition.
That brings us to a very critical part, the auditor's report. NTPC has joint statutory auditors. What did they have to say about the standalone financial results?
For the standalone financial results for the year ended March 31st, 2025, the joint statutory auditors have issued an unmodified opinion. This means they believe the financial statements give a true and fair view. However, they do have an emphasis of matter paragraph. This relates to Note 8 of the financial statements, which discusses the execution of a business transfer agreement or BTA dated August 17, 2023 with NTPC Mining Limited, a wholly owned subsidiary for hiving off NTPC's coal mining business at book value. The auditors highlight that this BTA is approved by the boards of NTPC and the subsidiary, but will only become effective upon completion of certain precedent conditions mentioned in the BTA. So, this transfer is still in progress.
Okay, an emphasis of matter is important to note, but it doesn't modify the opinion. What about the consolidated financial results? Any qualifications or other key points from the auditors there?
For the consolidated financial results, the joint statutory auditors have also issued an unmodified opinion. So, again, a clean sheet in terms of the overall true and fair view. However, they include an other matters section, which is quite common for large consolidated entities. They state that they did not audit the financial statements of 9 subsidiaries, whose financials reflect total assets of about 1,31,710 crore rupees and total revenues of 18,451 crore rupees for FY25. These subsidiaries' PAT was around 2,386 crore rupees. The auditors also didn't audit the group's share of net profit from 9 joint ventures, amounting to about 1,949 crore rupees. These financials were audited by other auditors, whose reports have been furnished to them. Furthermore, the consolidated results include unaudited financial information for two subsidiaries, total assets of about 4,272 crore rupees, revenue of 3,373 crore rupees, and the group's share of PAT from 7 joint ventures about 265 crore rupees. The management has certified these, and the auditors state that these unaudited portions are not material to the group. Crucially, their opinion on the consolidated financial results, insofar as it relates to these subsidiaries and JVs audited by others or unaudited, is based solely on the reports of the other auditors and the financial information certified by management. Their overall opinion remains unmodified.
So, reliance on other auditors and some unaudited components, but deemed not material, and overall an unmodified opinion for both standalone and consolidated. That's reassuring. Given all this, what's your outlook for NTPC, considering their performance, growth plans, and any risks?
NTPC has demonstrated strong operational and financial performance in FY25. The growth in capacity, high PLF for coal stations, and aggressive renewable energy targets paint a positive picture for future growth. Their foray into green hydrogen and nuclear power also indicates a long-term strategic vision. Key drivers will be continued operational excellence, timely execution of new projects, especially in the RE space, and favorable regulatory environment. Potential risks could include delays in project commissioning, volatility in fuel prices, though they have captive mines which mitigate some of this, and any challenges in the energy transition pathway. And of course, the standard disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Great. So, to summarize the main takeaways for NTPC's Q4 and FY25 performance?
NTPC has delivered a robust performance with healthy growth in revenue and profitability both at standalone and consolidated levels. The generation segment continues to be the main driver. Operationally, they've hit a high PLF. Strategically, they are making significant investments in renewables and new energy areas. The dividend payout is attractive for shareholders. The auditors have given unmodified opinions on both sets of accounts, with an emphasis of matter on the standalone side regarding the coal mining business transfer and standard other matter paragraphs on the consolidated side regarding reliance on other auditors for some subsidiaries and JVs. Overall, a solid set of numbers with a clear growth trajectory.
Excellent analysis. That gives our listeners a very comprehensive view of NTPC's latest performance.
My pleasure. Always interesting to unpack the numbers of such a key player in the economy.
And that's all the time we have for today. Thanks for tuning in. We'll catch you on the next episode.